please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
It's clearly end of an era. Good morning and welcome to Bazaar Morning Call. I'm Lata and with me are Anuj and Surabhi. Yes, we are going to see a lot of catharsis now. It cannot be only one exit. This has been a period, 2008 to 2018 has been a period when we have very slowly and painfully taken the post-Lehman crisis woes, and a lot of heads will roll because of this. Clearly, Shikha Sharma is only the first of other such events to happen. If one looked at the reasons why Shikha left, say, big divergence, demonetization time problems, or WhatsApp leak, this is not confined only to one bank. And so it's quite possible that we are going to see other exits. And of course, we know that ICICI is in the eye of a storm. But, well, we are going to talk about that in greater detail later on, and all of today and perhaps all of this week. But for the moment, I think the bulls are battling their own problems in the stock markets. They had a great day yesterday, but today the manner in which the US markets have receded from heights shows that perhaps there will be a bit of a problem for the US market, for the Indian markets and for the Indian bulls. Added to it is the FII number, which is looking, I mean, there have been sellers, but 1,300 crores looks a little bit of an eye-popping number. And that's also something the markets will have to be taking on board. And the third one is something that is going to break on your headlines very soon now. The Reserve Bank looks unlikely to relent too much on NPA rules. It may be one or two small things, but the Reserve Bank, and rightly so, you'll have to put your weight behind what the central bank is trying to do, a final cleanup. It looks unlikely to relent on those rules. I'll speak more about that. That's breaking news as far as we are concerned. But for the moment, it does look like there will be headwinds for the bulls, at least in the near term. Morning again, both of you.
Good morning, Dada. Good morning, Anuj. Absolutely, that's a big headline, and I'm going to get to that in 30 seconds because that could really define whether this nifty bank rally that we saw yesterday, whether that's going to continue or whether that's going to start to sputter a little bit. But, you know, Anuj, your thoughts on the day's action? Once again, global cues are actually quite okay. Most of the Asian markets are holding up. As usual, you'll find some, some drama in US market action, the latest being that the FBI raided Donald Trump's lawyer. But I think Asian markets for now have taken that in their stride. So given that setup and yesterday's price action, what do you think about the market today?
Morning, Surabhi. I think, as Lata said, end of an era, and I think the market is trying to price in the end of another era very soon, perhaps. So let's see. Axis and, of course, ICICI really are two stocks where which were really the problem point for this market. I mean, if you look at the Bank Nifty, for example, other stocks never had a problem. HDFC Bank, Kotak, IndusInd, it's only these two. But it's an uptrend. The Bank Nifty has rallied 1,000 points in 3 days. It's an expansion phase of the Bank Nifty after a bit of a bear market. So normally what happens is that you want to try a long trade first. First trade, at least, you want to try a long trade. Actually, once again, the SGX Nifty was flat. It's now, showing 35-point uptake. So the uptrend is well and truly intact, as we discussed yesterday as well. I think the crucial support is 24,828. Yesterday's low, 200 EMA on the Bank Nifty. The risk reward, I think, is still in your favor because you're coming out of a long sort of bear run on the Bank Nifty. Both Axis and ICICI have shown signs of bottoming out. And why is that important? Because these two stocks account for 25% of the Bank Nifty. You throw in a State Bank of India in the mix, and that's really almost half of the problem over for the Bank Nifty. The Nifty trade may sort of emerge in the second half today. And why am I saying that? Because yesterday's low of 10,328 is crucial. If you don't go anywhere near that, in that case, post 130, perhaps you will see a lot of short covering. 10,427 is the level I'm watching out for. If you cross that and you close above that, after a long time, you would have made a higher top. This market's been making lower top and lower bottom for some time now, for last 4 months. You cross 10,427 and you close above that, it would be the first major high for the market. That would lead to, even the stronger shorts. So far, you've seen the weak shorts covering. That would lead to stronger shorts also covering. But also, the rally in consumption stocks for last many days now just reiterates one thing, that leadership position is intact. And if banks start to do well, I think things look quite good. Having said all of that, I think the jury is still out on whether this really is the real thing, whether we just put a bottom in place and started to rally. But we will deal with that later.
Sure.
Right now, you are seeing a very powerful up move, and you have to participate on that on the way up.
Okay, I'm going to get to banks. As I do that, just a very important headline coming in from the Chinese president's address as well. Guess what? He's saying, I'm opening up the country. It's breaking on CNBC.com right now, saying he's looking at lowering import tariffs on autos, enforcing legal intellectual property, the rights of foreign firms. So it's a lot of what the US had been asking for, if anything, that kind of aids the bulls case. More on that in just a bit, because that's the big international breaking story right now. But first, the big one that we have for you here at home, and that is the RBI's approach to provisioning for banks. Lata, as you were saying, this Feb 12 circular that everybody's been discussing, that might not get diluted?
Well, what we are picking up both from government sources and from Reserve Bank sources is that this meeting is there today, and there are 15 members in this Rajya Sabha committee on subordinate legislation. And but there is, I mean, I sympathize with the RBI side for more than one reason. You know, this committee, in previous meetings of this committee, it was even attended by Mr. Rajkumar Doot, who is a Rajya Sabha member, but not a member of the subordinate legislation committee. Now, look at the quality of this panel. If they are going to sit in judgment of what are the NPA resolution rules, it kind of raises a few eyebrows. So, I mean, I'm not very sure that just because this committee is going to ask tough questions, the Reserve Bank is going to relent, or whether the Reserve Bank even should relent. You cannot have, just because someone is a Rajya Sabha member attending this committee, and even if he was a member of this committee, what does this say about, you know, the moral force of this committee to ask questions? Exactly. So my own sense from what I'm picking up from both government and I've spoken to a lot of people, a broad swathe of people, that if this is the kind of people who are going to ask questions, the Reserve Bank is not in a mood to relent. I mean, there may be small tweaks, like, okay, one-day default is perhaps taking it too far or something like that, but don't expect major changes from the Reserve Bank on this. That's something we have to take on board when you look at the stock performance.
Okay, by the way, just pull out SGX Nifty intraday, Hang Seng intraday. Just, you know, once again, a bit of a global party right now. Intraday, I mean, we'll just see the intraday moves on both SGX Nifty and the Hang Seng market. That's the SGX Nifty. It was in the red just about 15 minutes back. 45-point uptick is what you're seeing right now. Look at that move on Hang Seng intraday, 300-point rally right now happening in the Hang Seng. So today is right now a bit of a global cheer that you're getting with the news out of China.
We need to now get away from Rajya Sabha and concentrate on Xi Jinping. I mean, if we can get any further headlines from Surabhi, you were reading out from CNBC.com. Maybe those are the headlines we have to concentrate on.
I'll just quickly repeat now. This obviously is surprising everybody because it's playing as per script. We saw those tweets. President Trump's tweets about friendship and about having confidence that this is going to end well and there won't be a trade war. Guess what? China plays ball this morning, and these are comments that are coming in from that all-important event, the speech where the Chinese president was speaking. He's saying that the measures will include lowering import tariffs for autos. This is critical for the U.S. economy, and this is exactly what the U.S. has been negotiating for. So they're lowering import tariffs on autos.
Let's do one thing. Let's try and cut to CNBC Asia.
CNBC. Oh, right. CNBC.com is at the moment not discussing Xi Jinping. But, you know, this is a huge change from what one was expecting. This is not war talk by any means. This is, well, peace talk and negotiations. You must notice, you would have noticed that even when Trump was tweeting about the unfair WTO arrangements, he kept saying that Xi Jinping is a friend of mine, and that, you know, he will be able to, he will be willing to negotiate. You know, this is the mark. We've all been having one image of Trump, but it looks like he's a master negotiator.
Absolutely.
With all the bluster, he has ensured that he doesn't make an enemy of Xi Jinping, that Xi Jinping doesn't look bad when he comes to the negotiating table, because Trump has all the while admired him and said that he's a great leader and kind of made it easy for him, kept a window open for him to come to the negotiating table. So I think we should keep those flashes on.
We should keep those flashes on. And yeah, I mean, you know, I take your point completely. And, you know, with Donald Trump, it's quite clearly now emerging. You know, we're discussing, you know, I think Ashwini made this point, this is negotiation 101, Donald Trump style. But you could be reaching a stage where it's win-win for all. For now, of course, China is the only market not doing well. The rest of the markets, Hong Kong, I think the one which we are positively correlated to, and also SGX Nifty. Now, why is this important is because this was the overhang.
The niggling worry,
exactly,
off and on, it will keep coming back. Yeah.
But, this may not be the end of it, but for now, at least the market is doing
I would
well.
just say that I think the market is going to take a lot of heart from the extent to which Xi Jinping has gone. He's gone on record at a public forum to also say that China is going to enforce the legal intellectual property of foreign firms and improve the investment environment for international companies. Point by point, he's gone and matched exactly what the US had been lobbying for.
But, let's just stay back. You know how long it can take to frame an intellectual property rights legislation?
That is true.
It takes a while.
Yes.
And then you have to import, you have to have a legal system, a judicial system that is able to run it, lawyers who are able to negotiate it. This is not a day's job. How many years did our, IBC, Insolvency and Bankruptcy Code take? And we have a, A-class legal system comparable to the best in the world. Our legal minds and our judicial system is from the finest British traditions. And we took so long to put, whether it is an IBC or any such new law in place.
Maybe
intellectual property rights in China will take a while. It is the commitment. So I think in both cases it was noise that I will do all these tariffs. They didn't do any of it. All that they did was 10% on aluminum and 25% on steel, which was not applicable to 65% of the countries. Ultimately, it was just, at the moment, it's all sound and fury, signifying very little change on the ground. But I think for the markets, which obviously runs on a sentiment barometer, Xi Jinping willing to say that he will put in place an intellectual property rights regimen and that he will be open for trade and bring down tariffs is a very, very big development in this ongoing trade tit for tat. I think we have an expert joining us. Richard Harris of Port Shelter is with us. Richard, good morning and thanks for joining. I don't know if you have read all the lines coming in from Xi Jinping's speech at a public forum. Open to intellectual property rights, open to free trade and bringing down tariffs. Your thoughts?
Well, I think actually he's gone quite a long way. In fact, the first half of the speech was interesting. He was talking about reform and almost selling it to the Chinese people, almost ironically, as if he was running for office. And then he turned to world trade and how beneficial it was. And now some of these opening up statements. I mean, he's a very clever man. He knows the issues inside out. The question is he take reform on the nose, as the Chinese have not been able to do for the last 40 years, or are these just more platitudes? And the position of strength that he's in now, perhaps there is an opportunity, because China needs to open up. It's the big issue is not imports into the US, it's imports into China. China needs to open up. And it may just be that Xi Jinping, with his new powers, is able to draw that very delicate line between national security and free markets.
Richard, good morning. So, is it fair to say that this whole issue of trade war as a worry for the market is now well and truly over, or could we have something else coming back now?
No, and I think the market was getting a little bit too excited about, the whole issues of trade war and stuff as well. Yes, a skirmish, and yes, we had come to a time where the playing field was so unlevel and biased in China's favor that something had to happen. Now something's happened. And I think that, it can only be positive for China, just as Deng Xiaoping opened up 40 years ago, for Xi Jinping to open up now.
Yeah. I just want to read out the comments again, and this is China we're talking about. This is not a confused, banana republic or imperfect democracy like India. This is China, and it's coming from the top leader. I'll just read out the quote. We should stay committed to openness, connectivity, and mutual benefits, build an open global economy, and reinforce cooperation within the G20, APEC, and other multilateral frameworks. We should promote trade and investment, liberalization, and facilitation, support the multilateral trading system. So if these comments, Richard, were to be true, and if China were to follow them up, then this general sense of, protectionism that we've seen over the last couple of months, in fact, the last year and a half, perhaps it could kind of alter the course. That's a more academic point. A simple point on the markets now. Does this mean that we really resume the big global rally starting with the US market itself?
Well, I don't know about a big global rally, but I think we're in a period of consolidation now, whether the global rally starts today or starts in May, June, or even October. I'm not too sure. But I do feel that we probably will have seen enough consolidation for the markets to move on ahead. Don't forget that 3 weeks ago, Jay Powell was talking about a Goldilocks economy. So, that hasn't gone away. But I think this is, it's quite an important speech in that it has said a lot of new stuff. It's also said a lot of old stuff. Will the Chinese actually follow it through? Well, that remains to be seen, and the Trump administration is going to use the trust but verify route on that. They're not going to believe it until they see it.
My point, Richard, it's not going to be...
Positive.
Yeah, it's not going to be very easy to have an intellectual property rights regime in a country where this law doesn't exist, at least not in the way it exists in other countries, where the legal system is not equipped to deal with a law like this. Are these promises immediately implementable? And therefore, can we see re-emergence of small skirmishes and angry words every now and then?
Yes, I think that's exactly right. These things aren't going to move in a straight line. They're going to move in a series of waves. You're quite right about an intellectual property law. It's very nice to have an intellectual property law, but that needs to be based on the rule of law. And, what happens when a foreign company and a Chinese company go to court? Are we going to see the same bias towards the Chinese company? There are some real fundamental reforms there. And if Xi Jinping can deal with the rule of law issue, he will turn out to be a real great leader. Okay. But the Communist Party has to balance that between the rule of law and its own needs to stay dominant.
Okay. Dow futures, by the way, are up 250, 260 points now. Asian markets in the green, most of the markets, of course.
Richard, I just want to make a point. They were actually down 200 points because of the earlier news. So actually, from the lows, it seems to suggest a big rally.
Oh, yes, a big rally, of course, is in the place. So, Richard, what about a market like India, which has underperformed because of its own domestic issues as well? Do you get a sense that the risk-reward is now in favor of buying a market like India?
Well, I think so, because this stage of the market, typically what you see is European markets recover, and then you see emerging markets recover. So I think it's looking fine, set for the cycle. Obviously, if we continue to have trade skirmishes, and technically they've not gone away, I think China will be the loser. And that may well favor India. But I think as time goes on, we look at much more pinpointed issues. The US is now pinpointing China, and they're still going to let India have a lot of slack in terms of any trade issues they may have, which I think are pretty small anyway in India's case.
Yep, that's true. But, China, this is not an unmitigated, I am ready to bow down speech. If you just look at the paragraphs going on, China does not seek trade surpluses. We have a genuine desire to increase imports and achieve greater balance of international payments under the current account. We hope developed countries will stop imposing restrictions on normal and reasonable trade of high-tech products and relax export controls on trade with China. Yeah. So,
it's only fair. He's asking for a little bit of
reciprocal treatment. Richard Harris, thank you very much for joining us. I think we will have occasion to invite you again and again on both this exchange of words and perhaps new developments in international property rights and in tariffs, both in the US and in China. Well, we will revisit this topic a zillion times today, I'm sure. But for the moment, more equity advice?
Absolutely. We've got an equity call coming in from the wise experts this morning. Timothy Moore of Goldman Sachs maintains his overweight stance on Indian equities as the economic activity continues to pick up, which supports their view for a recovery in corporate earnings cycle. He expects earnings to grow 16% this year and 18% next year, which should drive the Nifty towards their 12-month target of 11,800. He says while Indian equities have underperformed the region by about 4% in 2018 so far, that's in dollar terms, and could stay under pressure in the near term given a likely weak fourth quarter earnings season, and this is weakness coming in largely in the fourth quarter from banks. The recent correction, he says, has brought absolute valuations down by 8%, and their risk appetite indicator has reset to lower levels, suggesting an enhanced entry point in case the correction extends further. So it seems GS is finding value at these levels in Indian stocks.
Okay, some money market views. Yesterday, of course, the bonds actually rose a lot. Bhaskar Pranav of HDFC Bank says the world is watching war of words or lack of it between US and China on the trade front. He says risk sentiment was positive before news came about of the FBI raid. In India, he expects the USD INR pair to hold in a range of between 64.90, 65.10. But with the recent words coming in, I think the US dollar could cheapen a little more. So more strength for the Indian rupee cannot be ruled out.
Okay, well, Bhaskar Panda says on bonds, the RBI's announcement regarding FPI investments in bonds for 2018-19 was another positive after a dovish policy. Yet he adds the market is realizing that too much optimism and sharp movements in the yield may not be warranted. He's expecting the 10-year to remain within the 7.2 to 7.25% range for the day. All the way, because it seems, at least it seems, that the US and China might just be smoking the peace pipe on those trade wars. Big speech by the Chinese president, which is why you're seeing that kind of surge on the SGX Nifty and the rest of the Asian market region. Let's now boil this down to stocks. Our entire team is standing by as always with the top 10 list of the morning. Good morning, guys. Anuj, let me start with you as always. What's on your radar?
So, Surabhi, of course, this was done before, we had all these announcements today. You would want to focus on metals, the Tata Motors, Twins, and all those kind of stocks which are really exposed to this news. Banks will do well. I think the likes of ICICI, Axis, we've discussed that. Yes Bank has made a double bottom at around 285. Faces some congestion now between current price and the 200-day moving average of 329. But big delivery-based buying is what we have seen on Yes Bank. Marico did well yesterday, bounced back right from its 20 DMA, not 200 DMA, and also strong delivery buying. Consistently, the stocks, consumption stocks have seen a rally as well.
Okay, so that's very important, stocks to keep on your radar. We will come back to our top 10, but we're joined by another guest to tell us his view on the new statements coming in from Xi Jinping, the Chinese leader. Shane Oliver joins us. Good morning, Shane, and thank you very much for joining us. I suppose you've seen the recent, the 10-minute ago statements coming from Xi Jinping at a public forum where he has said that China is for open trade, it will reduce its tariffs, and most importantly, put in place an intellectual property rights regime. Your thoughts on what this can do to markets?
Well, quite clearly the comments from President Xi Jinping are very positive, very conciliatory. There's been this ongoing debate recently, as the last couple of days, as to whether the Chinese and the Americans are actually in negotiations or not. Obviously, we need negotiations to occur fairly quickly. Otherwise, those tariffs that both have threatened will go into place. And Xi Jinping's comments, I think, are extremely positive in that regard. Whether it will be enough to appease the Americans remains to be seen, but it's a huge step in the right direction. I think it's also quite important that President Xi indicated that Cold War zero-sum mentalities are out of place. I think that's a very positive statement. So quite clearly, the Chinese are taking the high road here. There's always going to be a good cop, bad cop sort of stuff coming out of China, threats of retaliation, but quite clearly the president is focused on resolving the issues. So I think that's a very positive move.
Okay. How do you rank markets now? What would you buy on the back of this news? Would it be developed markets?
Well, emerging world is actually more exposed to a trade war than developed markets are, because exports or trade tends to be a higher share of their economic activity, particularly Asian markets. If the trade war was going to be between the US and China, the supply chain across Asia was going to be most vulnerable to that. So you would be looking at companies like shipping companies, industrials, in particular high-tech companies, all of which, basically companies which are exposed to the supply chain that links the US and China, and that would stand to lose the most if there were to be a full-blown trade war.
Shane, good morning. So would it be fair to say that this correction that we had in equity markets, this could be coming to an end?
It could be, but there's a fair way to go yet in terms of this whole issue, because don't forget US shares have had this correction, and that has brought down global share markets. And we've been sort of bouncing along the bottom for a while as new news hit, sometimes positive, sometimes negative. But if this is the start of negotiations between the US and China, then there's a good chance that we have seen the lows and that we will rally from here. But those negotiations have to move fairly quickly, otherwise the tariffs that the Americans are proposing and that the Chinese have planned will start to come into force at the end of next month or going into June. So I'm reasonably confident that this is a step towards resolving the issue, and I always thought the base case was more likely to be negotiation rather than a trade war, and this just sort of increases the chance that that base case will be right.
Okay, well, we are going to get you more analysis of what Xi Jinping has said and what it will mean to global trade and global markets, whether you see global markets once again going back to their January or early February highs is the question on everyone's mind. But since we started speaking about the micros, let's just finish the top 10 list of stocks that you should be watching out for because of news. Sonal, you have sugar stocks on your list.
Well, Lata, last week we spoke to SMA and they told us that the sugarcane mills, they owe 16,000 crore rupees to all the cane farmers. And now reports are suggesting that the government is coming to their rescue and is willing to pay the farmers on the behalf of these sugar mills. And they might be willing to pay around 55 rupees per ton for the sugarcane. But again, last 2 weeks back, they had also scrapped the export duty on these sugar stocks, but they did not help the sugar companies because globally the sugar prices were at 2.5-year lows. So we'll have to see really if this move will really help the sugar companies.
All right. Thanks a lot for that. Wipro, Rima?
Well, Lata, once again, client-specific issues will hurt Wipro in the quarter. The company has said that one of its telecom clients, they haven't specified Aircel, but the market's guess is going to be Aircel. That is filed for bankruptcy earlier in this year, as a result of which the profits of Wipro in Q4 will be impacted by 65 to 75 basis points. That's what the company said. CLSA estimates that this will impact the margins by 70 basis points. It will impact growth in FY19 as well. Morgan Stanley says the impact on revenues, however, will be lower than the impact that we'll see on the profits. That's on account of the provisions hitting the profitability. That said, the company will continue to report growth in Q4 within the guided range. But for now, negative for Wipro.
Okay, negative for Wipro for now. But tell you something, the sector of the morning surely is going to be metals. Nigel will tell us. Nigel?
Well, in fact, over the last couple of days, aluminium prices are up between around 6 to around 7%. That's after the United States has imposed sanctions on Russia. What this does is, in fact, it impacts Rusal. Rusal is one of the large aluminium producers. And why is it important in terms of the global aluminium market? It accounts for nearly around 6% of the total market. Ex-China, that number goes to around 13%. There is a possibility of a supply disruption, and that's why, in fact, we have seen a big surge in aluminium prices. Who benefits? Hindalco, because they're integrated domestically, so no worries over here. Novelis, in the near term, there could be some margin pressure because they buy some part of the ignits from the open market. But overall, it should be positive for Hindalco. Edelweiss is telling us that. And even for Vedanta, going ahead, they could pass on whatever price increases we're seeing in terms of alumina prices that have surged up. So watch out for Hindalco as well as Vedanta on the back of a sharp spike we have seen in aluminium prices.
Okay, all right, Nigel, thanks very much for that. So metals definitely on our radar today. Nimesh, Max Financial, they're raising some money.
Oh yes, it's not some money. They're raising up to 5,000 crores, and the board approved the same last night. And they've got firm commitments from the likes of KKR, Standard Chartered, and TPG. Essentially, this 5,000 crores has been raised to buy out the JV partner in Max Life. So Max Financial will buy out the JV partner in Max Life Insurance, the insurance play. Abhishek had worked on some numbers, and the embedded value for FY17 for Max Life worked at close to 7,000 crores, and at the trailing market cap of close to 20,000 crores, this 25% works out to close to 5,000 crores. So maybe this money is essentially been used to buy out the JV partner in Max Life. Also, watch out for what happens with the IDBI Federal deal, because there were media reports suggesting that Max Financials is one of the key bidders for IDBI Federal. So even that will be in focus. But essentially, the press release says that they're raising 5,000 crores to buy out the JV partner in Max Life.
Oh yes, they had indicated, and now they are arranging for the money as well. Okay, Anisha, other stocks, before we come, of course, to banking, which is the big sector we will speak about, but other stocks in news?
Well, quickly to wrap up, I'll start with HDFC Limited, wherein they have raised the home loan rates by 20 basis points, so that should be in focus. Moving on to Simplex Infrastructure, wherein there is a board meet on April 14th, where the promoter stake is expected to go up because they're looking to issue some more warrants on a preferential basis to the promoters. Lastly, on Gravita India, wherein the commercial production has started on one of the units, which is in Chittor, which has an annual capacity of 1,200 million ton per annum, so that should be in focus as well. Back to you.
Okay, all right, Anisha, thanks so much for that. And now to banks. Lata, they say all good things come to an end. Is it going to be like that? I mean, this hope that provisioning requirements will become even lower, you know, from the high standards of Feb 12?
That was always wishful thinking because the bank's IBA has been writing for a long time to RBI. There was a lot of pressure on RBI, and today, of course, the pressure will reach the limit because RBI will be meeting the Rajya Sabha Committee on Subordinate Legislation. Now, separately, we were telling you from government sources that a previous meeting of that committee was also attended by the likes of Rajkumar Doot, who's a Rajya Sabha member, but not a member of this committee. But what government sources were telling us was that this points out to how conflicted this committee is. Separately, we heard from Reserve Bank sources that they are very serious about this cleanup so that banks can start lending yet again. The pain will be 6 months, but that's what they want. Otherwise, the lending system is choked. So to expect too much because of this meeting is wishful thinking. The Reserve Bank may stay put.
And finally, maybe just a quick word on Axis and ICICI with the sort of, you know, headlines that have come through. Just your interpretation on what is likely to be obviously a change in guard, definitely at Axis.
Well, you know, we began by saying that, you know, RBI is not going to relent on these rules. That per se is going to be negative for many of the banks, and that will include Axis. But the news of the resignation itself is likely to be seen as positive. To some extent, it was already in the price. No one likes uncertainty at the top. And if there is clearly now a definite timetable that Shikha Sharma resigns, there is enough time for handing over of the baton and finding a search committee, finding a new MD. In also, you know, the time period also indicates that Shikha Sharma could resign at a high because the Reserve Bank rules clearly want people to provide in the quarter that just ended and in the current quarter. They've given 6 months' time for loans over 2,000 crore to be recognized and resolved. So for the September 30th, for all you know, Axis will actually report very good numbers. And December 31, definitely so. It's a rebound. So in a way, it's a very honorable exit. It could be an exit on a high. The stock, for the moment, will react positively because it's an end of uncertainty.
Okay, and finally, I think we have Abhishek with us very quickly. Abhishek, the UBS note, which is basically they're going by the Feb 12 circular rules, and I think they've tweaked their targets down on several stocks.
Well, Surabhi, they have mentioned that, you know, around 15.5% is the kind of stress in the banking sector, of which, you know, 3.6% is yet to be recognized, which will be recognized over the next 3 to 4 months. A large part of this 3.6% will be recognized over the next 3 to 4 months. They have removed ICICI Bank from their APEC key call list, while they have lowered the earnings estimate of banks under coverage by 0 to 50% for FY19 and by about 6% on FY20 basis. Quickly to run through, they have reduce the target price on key banks like SBI, ICICI, Axis and Bank of Baroda by anywhere between 7 to 9%, while they have increased the target price by 5.5% for IndusInd Bank. Back to you.
All right, Abhishek, thanks very much. Quick recap of the top 10 list this morning. Stocks expected to gain include Yes Bank, Marico, Dhampur Sugar, Sri Renuka, Balrampur Chini, Hindalco, Vedanta, Max Financial, HDFC, Simplex Infra, Gravita, Alembic, Axis Bank because of the developments over the evening. Stocks that could be under pressure are Wipro and ICICI Bank.